trillion Ugandan shillings, and looking at it now, it has gone down by a whole 6 points. But we are seeing a total of 158,900 shares, and obviously this is corresponding to a market value of about 2,832,200 Ugandan shillings, and that was what was traded as of Friday of last week. So compared to the previous trading day, which in this case is 8th November, today's data is actually showing a 74% decline in volume and an 87% decline in turnover. So this put together is what is bringing us to a market capitalization of 15.5 trillion Ugandan shillings. So in aggregate, we're looking at listed companies that participated, and we ended with 2 gainers as well as 6 losers. So the 2 gainers in this case were MTN Uganda, that saw a share price appreciation of 0.59%, and Equity Bank, that saw a share price appreciation of 0.51. Now, this comes as a surprise because Equity has actually been going through a really rough time as of the past months. So we are seeing hope as this week takes off for Equity that it might actually end the year with an actual statement or what to say to its shareholders, because it has really been a scaring time for the Equity Bank shareholders. But MTN doesn't come as a surprise, because this has been a month of news, and you know how news affects investor sentiment in the world of financial markets. And we are expecting to see shares, dividends being given here and there. The terms and conditions were released in their last communication to their shareholders, and this indeed has to spark up a lot of activity within the MTN Uganda shareholders. But looking onto the losing side, we are seeing Centum Investments that actually came out with a share price depreciation of about 2.63%, and it led the losers as of the previous trading day, and this was bringing it to a share price of about 214.77 per share. So it was followed closely by KCB Group that actually showed a share price depreciation of about 1.72%, and East African Breweries with a share price depreciation of about 1.19%, as well as Kenya Airways with a share price depreciation of 0.17%. Now we are seeing the highest recorded volume of traded shares coming from Bank of Baroda Uganda, which has also been in the news of recent, and last week was quite a week of publicity for them and their shareholders, and seeing this kind of activity is actually not coming as a surprise. But we're seeing it with the highest volume of traded shares, that is about 153,100 traded shares, and followed closely by Cipla Quality Chemicals with 3,000 and MTN Uganda with 2,800. Now, the previous week obviously was the week for these 3 equities, as the World Investor Week was taking its course, and we saw them in so many conferences and so many events of them trying their level best to increase financial literacy and spark investor sentiment. But moving on to the market indices, and of course starting with the benchmark, which is the Uganda Securities Exchange the Uganda Securities Exchange All Share Index, that paired to about 0.65, and it went down by a whole 0.07%, and points to close at about 895.72, and obviously this was representing a 1-week loss of about 2.32%. 4-week loss of about 3.92%, and an overall year-to-date loss of 26.13%. So the Uganda Local Company Index, on the other hand, increased by 0.19% to reach about 279.89 points, and making it a 1-week loss of about 0.3%, and a 4-week loss of 0.43%, as well as a year-to-date month-to-date gain of 2.65%. Now, that is what is coming from the Uganda Securities Exchange as of today, and we're seeing a lot of activity within the entities that are listed, and we're yet to see a lot more happening on the Uganda Securities Exchange, especially within the telecommunication companies. With Airtel being listed now, we're yet to see a lot coming in from MTN and the stiff competition to increase the investors' expectations. But coming on to some other important news on the Uganda Securities Exchange, we're actually noticing we are noticing that the Uganda Securities Exchange is planning to list itself on the exchange, as just like the Nairobi Securities Exchange and the Nigerian Securities Exchange. But the Uganda Securities Exchange self-listing is actually to be decided by how government handles Umeme's exit, and this is quite something that all investors have their eyes set up to, because as the prices of Umeme go up, Umeme shares, it is coming close to its exit, and we are yet to see how the government actually plays out and how it's going to affect the Uganda Securities Exchange at large. But the Uganda Securities Exchange says it has actually already developed a roadmap to self-list as a way of improving value and attractiveness to foreign investors. And the government's decision not to renew Umeme's concession has actually made it really difficult for the Uganda Securities Exchange to list on as a way of improving its visibility. So, speaking in an interview in Kampala, Mr. Paul Buiso, the Uganda Securities Exchange executive officer, said Umeme remains the biggest trading counter on the stock exchange, and it explains its importance on the exchange plan to self-list as a way of attracting more trading activity and creating more liquidity. Now, the decision in 2025 of Umeme has actually handled well help as make of a decision. But if the concession had been renewed, because Umeme is our biggest trading counter, we would definitely have listed, because it's about revenue and liquidity, as he said. But self-listing can actually make the exchange more attractive to institutional investors, including mutual funds, pension funds, and of course here we're talking NSSF and other financial institutions who may actually prefer to invest in publicly traded entities. Now, in 5 consecutive quarters to 2023 third quarter, Umeme had actually had the highest equity turnover on the Uganda Securities Exchange, according to the data from the Capital Markets Authority, and the Umeme encounter received tradings worth 6.745 billion Ugandan shillings in the quarter ending September 2023. Now, while it's closest to the competitor of DFCU's traded shares that were worth about 3.84 billion, the exchange actually needs to have highly active counters to reassure investors of the ability to pay invested money through the trading. And the Uganda Securities Exchange has a number of less active counters, given that it's largely dominated by institutional investors who actually hold on to stocks, and as a result, Umeme's exit actually from the market is actually likely to impact on the Uganda Securities Exchange activity at large, as you can see. But the government has already indicated that it will not renew Umeme's 20-year concession when it expires as of March of 2025, and the power distributors' operations and assets will revert to government, which has already indicated that it is in the process of creating a state company to replace Uganda. And shareholders are actually expected to receive compensation for their shares, which will be equal to the net value of the company's assets, and plus a 5% premium in a payout at the end of the concession. So as of June 2023, Umeme's value stood at about 933 billion Ugandan shillings, and a government audit will later determine the final payout amount before it eventually exits the exchange. But however, the listing of Airtel will actually re-energize the Uganda Securities Exchange, whose market capitalization now stands at about 11.8 trillion from the 6.8 trillion Ugandan shillings, due to the addition of the telecoms capitalization of 4 trillion Ugandan shillings. Now, Mr. Bwiso said the plan to actually self-list had already been developed, and the Uganda Securities Exchange now started on the roadmap of listing. Now, we believe at some point in 2025 we should be listed once these transactions or the Airtel public offering deal and Umeme's exit are complete, and that is what he said. So, and Commodities Exchange, the Uganda Securities Exchange, whose self-listing actually still faces capital inadequacy, is now attempting to generate sufficient revenue to attract investors by creating capital plans such as commodities markets. And the plan is actually expected to increase liquidity on the exchange and enable it to diversify its products offering and everything that falls in line with that. But Mr. Bwiso actually said again that there is need to mitigate risks, given that the commodities are capital intensive yet risky. So he said it actually requires that the exchange should onboard standard warehouses as well as identify warehousing gaps, if any. And the exchange plan is to trade 100 million US dollars worth of grain, and it will form about 2 joint ventures with 2 significant yet unnamed grain industry partners that have high quality grain. Now, that is actually what is coming in from the Uganda Securities Exchange itself. This is actually major news, and as investors, you know that just a highlight like this is bound to affect the markets and the performance of the listed equities at large. But moving on to another major headline from the Uganda Securities Exchange itself, we are looking at its highlight of only 22% of the Uganda Securities Exchange being women. Now, Mr. Bwiso actually says that women constitute 22% of the total investors in the stock market in Uganda as of date, and at least 22% of these investors in the Uganda Securities Exchange are women, according to the Uganda Securities Exchange Chief Executive Officer Paul Bwiso. So speaking of the breakfast meeting hosted by the Uganda Securities Exchange, Mr. Bwiso actually said women constitute 22% of the total investors in the stock market, noting that there was a need to proactively promote women participation in these equity investments. And as Mr. Bwiso spoke, these instruments, and there is actually money to invest in the capital, and letting women become proactive in investing in the stock market. And the Uganda Securities Exchange currently has about 200,000 securities central depository accounts, which only have 41,000 shares. And the Uganda Securities Exchange also noted early last week that majority of the accounts have no shares, thus they can actually participate in the trade. But the data actually indicates that women are more involved in saving schemes, which makes them good candidates on equity market investments. But Ms. Ketke Kuza, the DFCU Bank Executive Director, also said that there has been an improvement in Uganda's saving culture. Much of this money has actually not been invested, which is not wise. But we will indeed bring more of this information that information coming from this women's breakfast that was actually held at a Protea Hotel in Kampala, and we will bring you live feed from what came in from there, and what these panel guests actually spoke of the 22% participants being women on the Uganda Securities Exchange. But Ms. Kate actually also went on to say it is actually not enough to keep saving, and you should invest the money in government securities and stocks at the Uganda Securities Exchange or investment clubs. And savings and investment are two different concepts, but are closely related accumulated, and saved money is usually fixed or invested in government debt and stocks to earn interest. Now, that is what was coming from the Uganda Securities Exchange, and a lot happened as of last week, but we are yet to see a much more eventful week within the Uganda Securities Exchange, and equity is battling for the top gainers and the most traded shares. But we will be right back with more on the East African financial markets, specifically the Nairobi Securities Exchange and what is going on within their markets.
Smart 24, driving business.
Cooking oil like no other makes your meal so sweet and scrumptious. The taste of Uganda. Yeah, the taste of Uganda.
For driving business. Smart 24, driving business.
Welcome back from that short break, and this is still Victor coming, bringing you the information from the East African financial markets as of Monday, as of the beginning of this trading week. And last week was the World Investor Week, which was really eventful for East Africa, and investors were in and about the markets, trying to look for shares, trying to look for what to buy and sell on the financial markets. But we were coming from the Uganda Securities Exchange, and we will soon be bringing more information from the Uganda markets briefly, but proceeding to the Nairobi Securities Exchange, which is also another major player in the financial markets of the East African region. And this is actually a comprehensive analysis of the Nairobi Securities Exchange as of their last trading day, which was Friday. So the Nairobi Securities Exchange actually plays a really crucial role on the East African financial landscape, and it is serving as a barometer for economic activities and investor sentiment. Now, it actually, the trading activities that transpired on Friday, November 10th, 2023, actually provided a really detailed analysis of the key metrics, notable stock movements, as well as market index performance. But moving straight to the trading volume and turnover, on that particular trading day, we actually saw the Nairobi Securities Exchange witnessing a substantial increase in both trading and volume turnover, and we saw a total of about 61,587,300 shares were actually exchanged, reflecting a remarkable 187% improvement compared to the previous trading day. Now, this surge in volume actually indicates a heightened market activity and possibly increased investor interest. But the total market value of the traded shares actually amounted to 837,603,165 million Kenyan shillings, and this was actually signaling about 181% improvement in turnover. And this surge in turnover actually underscores the value of the shares exchanged, reflecting a robust market liquidity. But however, despite the notable surge in the volume and turnover, the number of deals executed actually experienced a marginal decline of about 9%, and this suggests that while the market was more active, there were fewer individual transactions, possibly indicating larger block traders or a concentration of activity in specific stocks. But moving on to the market capitalization, the Nairobi Securities Exchange market capitalization as of today stands at 1.39 trillion Kenyan shillings, providing a snapshot of the overall value of the listed securities on the exchange. Now, this figure is actually critical for assessing the market size and its relative importance in the broader economy, and let's not fail to note that it serves as a benchmark for investors, policymakers, and analysts to actually gauge the exchange significance and its potential impact on the financial landscape. But coming from the market capitalization, we actually need to go deeper into the equity performance and see how these listed equities that brought this market to 1.39 trillion Kenyan shillings are performing and reacting to market conditions individually. But as of today, we saw out of the 47 Nairobi Securities Exchange listed equities that participated, we actually saw 17 recording gains and 14 registering losses, and we are looking at the Cooperative Bank of Kenya leading the gainers with an impressive 4.41% share price appreciation, closing at about 10.65 per share. And the positive movement actually suggests strong investor confidence in the bank and possibly driven by positive financial indicators and actually strategic initiatives or even broader economic factors. But on the flip side, we are looking at a Standard Group that experienced the most significant decline, with its share price depreciating by 6.1%, bringing it to 5.54 per share Kenyan shillings. And this was a downturn that actually was attributed to many company-specific factors and industry challenges, or actually broader market trends that could have affected the market and other players at large. But this was affecting media companies particularly. But BK Group, Unga Group, and Trans Century also registered notable losses, further emphasizing the day's mixed performance across the different stocks or the different sectors. But focusing on top performers, we are examining the top performers or top gainers, and it actually reveals a diverse set of companies experiencing positive momentum. Now, after the Cooperative Bank of Kenya, we saw Longhorn Publishers that secured a second position with about 4.27% share price increase, and this was actually suggesting a positive sentiment towards the publishing industry, and potentially driven by factors such as increased demand for educational materials or favorable company-specific developments. And East African Cables and Home Africa also made significant gains of about 3.16% and 3.13% respectively, and these positive movements might be attributed to sector-specific tailwinds and successful corporate strategies, or even favorable market conditions, as we all know. But other noteworthy losers, analyzing the worst performing stocks actually for investors provides insights into sectors or companies facing challenges, and we know that this very much can affect your decision making. And starting with the losers, a Standard Group that actually registered a 6.1% decline faces potential headwinds that actually merit further investigation. But BK Group, Unga Group, and Trans Century also experienced losses, and this was reflecting a broader trend of mixed performance across different industries. Now, the trading volumes of the key stocks, we are looking at Safaricom, that dominated the trading floor with the highest volume of traded shares. That was about 59.1 million shares, which is a really significant amount of shares. And this telecommunication giant's substantial trading volume is a testament to its significance in the Kenyan market and its popularity among the investors. And KCB Group, Equity Group Holdings, and Kengen followed with trading volumes of about 792,100, 434,900, and 276,400 shares respectively. Now, the prominence of these stocks in terms of volume actually underscores their impact on market dynamics and investors' portfolios. But shifting our focus to market indices and their performance, the Nairobi Securities Exchange All-Share Index is actually a key indicator of overall market performance, and it comes up as their benchmark. On this trading day, actually, the all-share index moved up by 0.63 points, and this was representing a 0.71% increase, closing at about 88.95. And this positive movement actually suggests a favorable trading session for the broader market. However, it's actually essential to contextualize this gain with different time frames to gain a comprehensive understanding. So over the past week, the all-share index actually experienced a notable gain of 3.74%, and this was indicating a positive trend in short term. And nevertheless, a broader perspective actually reveals a 4-week loss of 5.06%, highlighting potential challenges or corrections in the medium terms. Now, the year-to-date loss was actually registering. They actually registered the all-share index actually registered a year-to-date loss of about 30.22%, and this was obviously underscoring the persisting challenges and uncertainties that the market has faced throughout the year. Now, other notable indices actually include the 10-share index that recorded a 0.79% increase on the day, and this was translating to about a 0.54% gain for the week, and a year-to-date loss of about 10.45%. And the 20-share index was posting a modest 0.27% gain on the day and experiencing a 1.61% loss over the week, and a more substantial year-to-date loss of about 15.27%. And lastly, the Nairobi Securities Exchange 25-share index actually gained a 0.57% on the day, with a 0.21% increase over the week, and a significant year-to-date loss of 26.20%. And that is what is coming from the Nairobi Securities Exchange. We're seeing quite a mixed bag with these equities and how they are playing out to have the top spot as the top gainer. But as of today, we would want to concentrate on one of the gainers from the Nairobi Securities Exchange, and we would want to look at the Cooperative Bank of Kenya and their performance that was quite striking. We saw about a 4.41% share price appreciation. And just to give you a brief understanding, this bank is actually a company that is based and offers banking and related services within Kenya. And the company is actually primarily involved in corporate and retail banking, investment, as well as asset management services in various parts of Kenya. And the company's customer deposits include fixed, current account, and saving deposits. The company operates in two segments, which is retail banking and wholesale banking. And retail banking includes loan deposits and other transactions and balances with retail customers. Now, moving on to the equities individual performance, it closed at about 10.65 Kenyan shillings, and this was recording about a 4.4% gain over its previous closing price of 10.20 Kenyan shillings. And it began there with 12.30 Kenyan shillings and has since lost 13.4% of that price valuation, ranking it the 42nd on the Nairobi Securities Exchange in terms of year-to-date performance. Now, the bank is actually the 6th most traded stock on the exchange, and over the past 3 months, we are seeing it showing a total volume of about 36 million shares in about 5,287 deals, valued at about 418 million over the period, and that is, as you have seen, with an average of 571,337 traded shares per session. This is obviously bringing us to a volume high of about 10.1 million, and that was achieved as of October 3rd, and a low of 46,500 on August 31st for the same period. And we're seeing some really interesting figures from the beginning of the year, which is proving that Cooperative Bank of Kenya is actually a stock that deserves the attention that it is receiving. But in other news from the Nairobi Securities Exchange, we're seeing Ruto's the president of Kenya, Ruto's State of the Nation's address that defends the economic party score, and as well as more information from the oil situation and the ties that is happening within Uganda and Kenya, as we have seen. But the Kenya's president William Ruto actually used his second State of the Nation address in Parliament, and that was as of Thursday, to actually defend his administration's IMF and World Bank backed economic reforms, blamed for contributing to the high cost of living in the country. And Ruto said that the reforms, His Excellency Ruto said that the reforms, which include a scrapping of consumption subsidies on fuel and maize flour introduced by the previous administration of former President Uhuru Kenyatta, and aggressive taxation meant to wean the country off its binge borrowing, and had helped to stabilize the economy and made the public debt sustainable. But we must admit that as a country, he actually noted that we must admit as a country we had been living large and way beyond our means, and the time has come therefore to retire the false comforts and illusory benefits of wasteful expenditure and counterproductive subsidies on consumption, by which we dug ourselves deeper into the hole of avoidable debt. And the new direction may not be easy, but it is ethical and responsible, prudent, and most importantly necessary. So he stated that they might have to take hard decisions and make painful choices because they owe it to Kenyans to do the right thing and confront facts as they are, without flinching or coveting, as the president said. Now, this is coming as the Kenyan shilling is battling its way on the market with the US dollar, and as well as the oil situation that is happening as we speak between the president of Uganda and the president of Kenya himself. But looking deeper into the news within East Africa as we speak, speaking of the markets, we are focusing on how low the entry value of the Airtel IPO, the Airtel as a company, the little attention it received after it being listed, it was actually worth taking attention to, and the telecommunication giant actually highlighted that the attention it net received on getting listed on the Uganda Securities Exchange was actually very little. But as investors, we still stand on the fact that this is actually coming up as a form of creating competition on the Uganda Securities Exchange for the telecommunications company. So we are yet to see more overwhelming results from MTN as well as Airtel, because this is working sideways. As Airtel pushes MTN to work harder on their performance, MTN pushes Airtel to work harder on their performance as well. But just before I conclude this session of stock markets and financial market performances, I'd want to give you a glimpse of one of the markets that are from the rest of Africa or outside the region. And of course, in this case, we would be focusing on the Johannesburg Stock Exchange. And just to give you a small insight from what is going on within their markets as we speak. And as of their last trading day, we know Johannesburg Securities Exchange is a big dog on the continent, and it really deserves the attention that it is receiving. But as of yesterday, the Johannesburg Securities Exchange actually had a total of 207,905,512 shares in about 318,765 deals, which are indeed remarkable numbers. And this was corresponding to a market value of about 16,897,618,835.22 rands, and they were traded. And actually, compared to the previous trading session, which was Thursday, we are seeing that the data brings us to an 18% decline in volume, but showing us a 10% improvement in turnover and a 10% decline in deals. So this overall brings us to a market capitalization of 17.1 trillion rands. So in aggregate, we saw about 311 listed equities participating in trading, and they ended with about 145 gainers and 147 losers. And we are seeing Visual International Holdings leading the gainers with 50% share price appreciation, closing at 0.03 rands per share, followed closely by Delta Property Fund with a 30.77% appreciation in share price. And Trustco comes next with a Trustco Group Holdings with a share price appreciation of 22%, and Accelerate Property Fund with 11.11% share price appreciation. But on the losing side, we're seeing Mantengu Mining that came out with that came out the last as of the previous trading day, and they saw a price depreciation of about 10.71%, bringing them to a price share of a share price of 1 rand per share. But it was followed by Metrofile Holdings with a 9.36% share price depreciation. We're looking at Impala Platinum Holdings with a share price depreciation of 9.23%, and we're looking at Adcorp Holdings with 7.54% share price depreciation, and Sibanye Stillwater coming up with the highest volume of traded shares, that is at 16.1 million shares. And of course, speaking of highest volume, Growth Point Properties also didn't miss with 14.6 million traded shares, Redefined Properties with 13.1 million shares, and Pepco Holdings with 7.85 million traded shares. But this goes to show you that the Johannesburg Securities Exchange actually has most of its performing equities within the real estate area, and we're seeing real estate really making rounds and bringing in the income for shareholders. Actually, investors in the Johannesburg Securities Exchange seem to be more focused on the real estate market, and that is where their sentiment is directed. So just in case you had any hopes of joining the Johannesburg Securities Exchange, look through all the equities that are within the real estate area and see what best works for you, because because they never seem to disappoint. But lastly, just giving a small hint through the market indices, we are looking at the benchmark that declined by 833.37, giving us a 1.15% depreciation, and points to close at about 71,393.30, and that is the Johannesburg Securities Exchange All Share Index, and that data above actually brings us to a one-week loss of about 2.01%, a four-week loss of 2.09%, and an overall year-to-date loss of 2.27%. And other remarkable indices that performed were the Johannesburg Fledgling Index with a 0.18% appreciation, 0.16% appreciation, actually 1 week gain, and a year-to-date loss of 10.25%. Coming in after, we're looking at the small cap index with a 0.28% depreciation and a 1 week loss of 0.31%, as well as a year-to-date loss of 1.61%. And the mid-cap index didn't perform so well, and it came in with about 0.41% and a 1 week loss of 2.33%, as well as a year-to-date loss of 5.72%. And other indices like the top 40 index and the large cap index also didn't perform so well. The top 40 is showing us a depreciation of 1.38% and a 1 week loss of 2.21%, as well as a year-to-date loss of 2.27%. And the large cap index also is showing us a 1.52%, as well as a 1 week loss of 2.03% and a year-to-date loss of 1.79%. Now, just to wrap up today's summary of the financial markets, remember, very many factors play in the world of financial markets. You need to sit down and analyze, understand these factors, understand investor sentiment, understand the news that is coming in from these financial markets, understand the factors that are in play and the conditions that the markets are thriving in order to enhance your chances of making the right decision. Make sure you seek out for experts to advise you on what stocks, what financial securities you should invest in to ensure that you do not make a mistake, to ensure that you avoid disappointment. These are calculated moves. This isn't gambling. It never has been gambling. You need to calculate your moves as you enter the financial markets and know when to leave, know when to sell out, and know when to buy in. It is not something you just wake up in the morning and do without making any further plans. Now, thank you so much for joining us for today's edition of the Financial Markets Show. This show is actually it's available for you to get all the necessary news you need to know or get on financial markets, because you need to keep updated on every single piece of news that comes out, and to see how that news will affect the charts of these financial markets or the charts of these equities individually. Thank you for joining us today. I have been Victor Chiberutu, bringing you the information and news from financial markets as of today. Never forget to join us. Tune in every single day of the week, Monday to Friday, to not miss out on any of these valuable insights. Thank you.
Smart